Hello everyone, and welcome back to Explain the Charts. Today is May 23rd, 2025, and we're diving into the S&P 500 SPY to analyze both the current news and the chart data. Recent news indicates rising Treasury yields are causing concern, particularly regarding Trump's tax bill and its potential impact on the deficit. Some companies are also warning about the effect of tariffs. Let's see how these factors are reflected in the charts. Let's start with the daily chart to get a broader view. Looking at the daily chart, we can see a period of consistent upward movement throughout early 2024, followed by increased volatility in the later months. There was a significant dip around April 2025, followed by a recovery, but the recent candles suggest a potential pullback. Zooming in on the more recent candles on the daily chart, we see some choppiness. The last few candles indicate some indecision in the market, with both bullish and bearish signals present. Given the news about rising bond yields, this uncertainty is understandable. Now, let's switch to the 1-hour chart to see more granular price action. On the 1-hour chart, the volatility is even more pronounced. Notice the sharp decline and rebound around May 21st, 2025, potentially reflecting concerns mentioned in the news about deficit worries. Focusing on a smaller range, if we look at the last few days on the 1-hour chart, there appears to be a struggle to break above the 585 level, suggesting resistance around that price point. There's also a potential support level forming around 582. These levels might be important for short-term traders. For an even closer look, let's move to the 15-minute chart. Here, we can see very recent price movements, with a lot of back and forth, suggesting a battle between bulls and bears. On this very short-term scale, key levels may be found around 583 and 586. Looking at the most recent 15-minute candles, we can observe a downtrend. A break below 582 could signal further downside, while a sustained move above 586 could indicate bullish momentum. The most recent price of 583 is indecisive. To recap, key price levels to watch are resistance around 586 on the hourly and potential downside targets near 582. If bond yield concerns persist, expect increased volatility. A break below 582 is likely and should be watched for, with a high likelihood given the news, but if Trump administration soothes fears, we may see a run-up to 600 again. As always, trade safely, and see you next time on Explain the Charts.